Update with Major League Baseball. They're extending their talks today, so there's still hope, fingers crossed, that we might be able to start on time. We can only hope. Right now, though, in studio with us, want to welcome Mike Martinez, president of the Pension Group, a wealth management company. Of course, we've seen the Russian invasion of Ukraine rattling the global stock market at this point, and no doubt sparking anxiety, I think, with personal finance. First, Mike, thanks for joining us in studio. Love your blazer, by the way.
Well, thanks.
Like that. I have to get a picture of you because we got to tweet that out. Where did you get that? That looks awesome. Anyway, because my wife will want to know later. No, but on to more serious stuff, though. There's anxiety with personal finances. If you're heavily invested in the stock market like I am, you get a little worried, But with what's going on overseas right now, what are investors to do at this point? I would imagine thing number one is don't freak out, don't panic.
You're absolutely right. This is what we consider to be like a market shock. Anytime we look at different wars or different things over the last 50 years, we've seen times where people get fearful and they maybe make the wrong decision. Maybe they want to get ultra conservative or they go to cash and they miss the rebound as far as the market. If you have a good long-term plan and you have the right asset allocation mix or risk tolerance for your retirement plan, then it shouldn't be a concern. But those people that are maybe too aggressive, that are 100% in equities, and they're the ones that are feeling it.
Mike Martinez, the president of the Pension Group, is with us this morning. By the way, the website, thepensiongroup.com, to get more on Mike and what his wealth management company does. What about the upcoming interest rate hike from the feds? I know that has a few people concerned. What should, and maybe you're looking to refinance a mortgage or buy a new home, suggestions for those people?
Well, certainly refinance as quickly as you can, but we know back since November of last year that the Fed was going to have 3 rate increases this year, and we'll see what ends up happening. With the first rate increase here in March, we're thinking about a 25 basis point increase, not 50, especially with all the turmoil overseas. We don't anticipate the Fed increasing at 50 basis points, but if they do, certainly it's going to slow the economy down, and home prices and people refinancing car loans, you name it, everything's going to get a little more expensive. But if they have 3 rate increases, just like in 2018, we saw the market kind of drop Q4, and they readjusted. So just because the Fed says they're going to increase 3 times this year, they may only do 2, so who knows?
Well, Mike, does an interest rate hike affect other investments or other parts of the market?
I don't think it's necessarily going to affect the overall stock market, but when we look at it's when it's unexpected. If it goes from 25 to 50, investors don't like that, or there's uncertainty in the market, and then we could see maybe a drawback on the overall portfolios. But I think overall that it's kind of baked into the stock market.
Sure.
And we know this has been coming for some time, and it's just a matter of them increasing the rates. And obviously it's going to cost more for the average consumer to buy goods and services on credit.
Yeah, Mike Martinez is with us this morning, president of the Pension Group, and of course you can see more about what he does with his wealth management company at thepensiongroup.com. What about, I'm thinking about the midterms, which are a few months away. Is there anything the president could say tonight with his State of the Union address that would ease people, the anxiety? I'd like to hear more on how we're going to battle inflation, but if you don't mind me asking your thoughts on that.
Well, certainly, having a strong stance with Russia is going to be the key. As we've had with other presidents, having that strong posture, that we're not going to take these things to the American public, I think is going to be key. But when it comes to inflation, we are seeing things. We saw a 7.5% increase in inflation. This time was the first time for Social Security in a long time. They saw a 5.9% increase in Social Security payments. But again, as prices go up, just as you look, 20, 30 years ago, back to 1980, an average home would have been $55,000. Now the average cost is $400,000. Inflation has always been here. It's just this time right now it's exceeding expectations.
It's interesting, Mike. We talk about the interest rates going, spiking now, but I remember hearing the stories. I was a kid, but the early 80s and how they were double digits, and I keep thinking, how did people survive when they were double digits?
I know, it was like 17% CDs and mortgages were 20%, so we're still at relatively low interest rates. So it's one of those things where it could cool things off, and the Fed just has to reevaluate how much of the cooling off it's going to do. I mean, if they have a couple rate increases and then all of a sudden they decide not to do it, and then the market can rebound, So I don't anticipate that we're going to have a drawdown because we've been talking about it since November. They said there's going to be 3 rate increases this upcoming year, 3 in 2023. So we understand that there are going to be increases throughout the year, but it's not going to take the stock market down.
Yeah, I mean, we know it's coming. You're absolutely right. What about midterms, Mike? I've always wondered how does that affect, what we have invested, but how does that affect, the economy too?
Certainly with the midterm election, there's a lot of uncertainty. When we look at elections, midterm elections, we see since 1950 about a 17% drawdown in the stock market. But from that trough, that bottom of the market, we also see a 32% increase overall, over that period of time. So, as people get fearful, this is the time to maybe reposition a portfolio. Maybe you're real conservative, maybe tilt it one notch more aggressive so you can get the upswing. And it's no different with what's happening with Ukraine and Russia versus a midterm election.
Yeah, Mike Martinez is the president of the Pension Group, thepensiongroup.com. Mike, what are your, just kind of curious, with your clients, what's like one of the top 1-2 questions that they're asking you, their concerns? What are you hearing?
Well, I mean, right now, obviously, it's concern about how the portfolios are doing, and they're doing well. They're not losing as much because we understand risk, how much clients are willing to take risk, and we kind of dial them in to understand that we don't want to be too aggressive because times like this, they would see a dramatic impact to their retirement portfolio.
Yeah.
The other thing we get into when pre-retirees, do I have enough to retire? Have I saved enough in my 401k, my IRAs, or maybe I have a pension? How does the pension work? Oftentimes right now with the rising interest rate environment, people can actually lose money in their pensions because of these things called segmented interest rates. So it's, we really take a very holistic approach. It's not just the investments. We'll take a look at an income plan. We'll take a look at tax planning, tax-free income with Roth conversions, Social Security, and legacy planning. Something that should happen to you or your spouse. You have your affairs in order. And a lot of times people don't even have a basic will, but we're very holistic when we look, with our clients. But those are really the two key topics that we get from prospects or our clients.
Yeah, Mike, I've always wanted to know, just a guy being curious, is with what you do, is it difficult to do what you do to navigate through the ongoing, unpredictable at times, inflation?
I mean, it is, but when we put together portfolios, financial plans, we include inflation projections within that. So that's important that we look at that. It's not just a static type of portfolio or plan. It's also including inflation. Certainly not a 7.5%, but usually about 2.5 to 3 is typically what we project going forward.
Yeah, and I know you have some of this on your website, but you have a guide that can help people navigate through some of these issues right now. Is that right?
Yeah, I mean, we came out with the book Retire Financially Free. We have a toolkit. You can download that, complimentary, of course, at toolkitretire.com. Great information if you get laid off. If you have a 401k, what are some of the concerns you should be looking at? If you have a pension, there's pension mistakes, errors. A lot of great information in that toolkit, and certainly people can download that, or we can give them out a complimentary copy of that kit as well.
And you probably don't get this very often, this question, but if I could turn back time to my 20s and do a few things over as far as investing go, start a little bit earlier, what kind of words do you have for someone that's younger, 20s, 30s, that's, probably maybe not necessarily interested in, the pension group. However, it's probably a good time to start investing now if you're even at a young age.
I mean, it is, and I got kids, 22 to 25. My boys, they're growing up, and I always preach to them, start putting money into your IRAs or start doing Roths. How would you like to have tax-free income in retirement? A lot of people that retire today, everything's pre-tax, which means the joint owner of that's the IRS. When you retire, who else do you got to pay? You got to pay the IRS. But if you can start putting more money into Roth IRAs at a young age and let that build up for the next 20, 30 years, this is a great opportunity to get tax-free income and get you on track for retirement.
Well, Mike Martinez, I appreciate you coming in and putting a lot of people, I would imagine, at ease. President of the Pension Group, thepensiongroup.com. Am I missing anything?
No,
we cover everything?
Yeah, if you want to give us a call, give our office a call, 614-423-4600. Again, you can visit us at thepensiongroup.com.
All right, Mike, appreciate your time. Appreciate that so much. Some of the other things that are rolling through this